Hello, everyone, and thank you very much for being here with us this evening as we give you an intro to trading cryptocurrency. And as you see, this is actually an adaptation of a presentation that Ryan did a few months back. So we're going to take a look again at the cryptocurrencies now, as you know, from August 2017 to today, where we're sitting here, January of 2018. It's been about 7 lifetimes in the cryptocurrency
Right.
markets, right? It's been crazy. So let's now
Yeah.
jump back in and take another look at not only how do we get started in an introduction to what this is, but where we can go from here with cryptocurrencies. And we are very, very excited to welcome Ryan Wildey at Elliott Wave from ElliottWaveTrader.net. Ryan, thank you so much for being here.
Yeah. Thank you, and just thank everyone for coming on. Yeah. Again, this is an adaptation from the August 2017 presentation, which was done in the run-up to the start of the service. A few of the changes I have made. This is again focusing on the intro. There's a few security updates that I want to highlight. I think all of us on the site actually we did experience. Some members have some difficulties, so we really updated the security aspects of it, which I'll talk about. I'll talk a bit about where the market is. That's not the main point. Again, I want to help those that are interested in cryptos and investing in it, especially now with the big run up that we've had, get involved and how to do that. So that's the focus. And then we'll talk a little bit about the service, where we're at after, goodness, 5 months. A lot has changed, and it's been a huge market, of course, as I think a lot of people know. So let's get started. I do want to introduce myself a little bit better than last time. My name is Ryan Wildey. I, again, lead the cryptocurrency service at Elliott Wave Trader. I've been a part-time trader since about 2000, so well over a decade and a half. I personally trade stocks, futures, and options. I even added Forex to my kind of repertoire, so to speak. I'm still in a point of transition between full-time trading and analysis. I actually hold a corporate job, although it's starting to wind down. I do think that sometime in 2018 I'll be a full-time trader. I joined EWT as a member in 2015. I had known about Elliott Wave Analysis for the good part of my trading career, but never knew how to apply it. And I actually came to this site to learn, and here I am actually applying it day to day as a crypto analysis. I've traded cryptos themselves since 2012, and with Elliott Wave, of course, since 2015 after joining the service, or joining as a member. And then I started hosting the service in August 2017. I think it was roughly about June that Avi reached out to me on one of my business trips while I was on the site and said, "Hey, would you think about joining?" So here I am, and it's pretty exciting. Been a lot has changed in the last 5 months. So I want to, the typical disclaimers. So cryptocurrencies are particularly volatile assets. If you're watching it all, you see it firsthand. Nothing in this document is meant to suggest that trading cryptos is a good decision for you personally. There are a lot of risks. Cryptocurrency is a new, less regulated. I think when I first gave this presentation, I said it's an unregulated, but it actually is, regulation is starting to form around this market, but it still contains a lot of risk you need to any other asset out there. I will mention some of the results we've had in the last 5 months, but that does not promise anything in the future. And nothing in this document should be construed as an endorsement of a product, service, exchange, or any other entity mentioned here within. I do want to share my experiences with products, but I want to do that without being held to any sort of endorsement, because I do think that this market and asset class and all of that it's buggy. It has issues with use of different products and software, et cetera, that you just have to kind of work through as you're trading. And I'll talk a little bit about that as we go, and I talk a lot about it on the site. So here's kind of the context. I want to make sure you guys walk away from this presentation with kind of an overview of how to get yourself engaged, whether you choose to use the service or not. What is a cryptocurrency? What is trading it like? What are the benefits and risks? I'm going to get really practical about steps to get started. I don't think I'm going to go as live as I went last time, but we'll see the time. Last time I actually went through the process of buying crypto in front of everybody. I think that we've developed enough of a presentation where we may not have time, but let me see if I can do that. And then I'm going to talk about exchanges, and then I'm going to get a little bit deeper in security precautions this time. And then there's new stuff on policy and taxes, and I think that's really important for everyone to be sort of smart about. And then service description, I got about 5 slides. We'll talk about what we've done in the last 5 months, what the service is like. But again, my intent, you can stick around for that, whether you want to or not. Certainly would love for you to stick around. And then finally, a little bit of Q&A. And again, no chart analysis this time. I don't think we have time. So I'm gonna get started. So I'm gonna talk really quick about what a cryptocurrency is. I think that it's too easy to call it Bitcoin, and that's a problem, actually. I think that's the big myth. Really what has happened is this technology called blockchain or distributed ledger. And the analogy I like to use now is that if you imagine, if you've ever worked on a Google Doc or a shared spreadsheet, perhaps one that you've shared across your company, it's really easy for somebody to walk into that spreadsheet, if it's being used as a ledger, and start to mess with it and corrupt it. A distributed ledger is basically an encrypted code in a set of transactions or data that that many players are inputting to, but nobody can corrupt it. In fact, across the network of ledgers, the word node is used, or network node, and that can be the form of wallet files or software that are interacting with the blockchain ledger. All of those different versions that are across that network are basically keeping everyone correct. So if one ledger on one computer is corrupted, all the other ledgers sort of correct it, and that's done through some encrypted processes. I mean, I am not a techie myself, but I've kept myself reading to try to understand this technology as best I can. And what this does is this allows a lot of new use cases on the internet that never existed before. And so currency, thinking about this as a currency is a very limited view of blockchain. But what is happening is a lot of the blockchain use cases require some mode of value transaction or data transaction, and that's where currency comes into play. Again, all this started in 2009 when this mysterious fellow or gal or a group of people called Satoshi Nakamoto came up with a white paper describing Bitcoin, and then some developers got to work creating Bitcoin. It was the first cryptocurrency, but many followed. I think there was probably 2 or 3 within a year after Bitcoin, and now we're looking at 1,100 plus. Blockchain is changing the internet as we know it. I don't think a lot of people are internalizing that. Payments is, I kind of like to call it old school cryptocurrency or old school blockchain. New applications include ecosystems for distributed applications, Ethereum and EOS. Those are 2 coins, and they are new examples of that. And basically, you have applications that lots of folks are interacting with in a secure manner. Authentication, security, Factom is an example. Distributed data storage is a new one, and we have a Dropbox competitor called Story, renting out my hard drive with someone else's files on my hard drive that I'm getting paid for using that company's technology. And then distributing bank wire, a lot of people, Ripple's been a big one. It's been one of our big trades. They're trying to displace, international payments and wire transfer, and actually the Feds, the Bank of Korea and the Bank of Japan are starting to use Ripple to do that. That's more of a centralized example of cryptocurrency. And then we're starting to see things like hedge funds and asset management. I go on and on. I mean, I basically listed these last time. Just different ways that cryptocurrency or blockchain is being used. Just some videos. I'll hold this slide for just a bit. Some people might want to snapshot it. I'm sure there are a lot better ones. These are the ones that I scanned last time in August, and I haven't updated it. But these are videos that help you understand blockchain better. Let's talk about advantages versus fiat. So cryptocurrency are irreversible transactions. So if I pay for goods in cryptocurrency, if I do it on a Visa, I can call Visa and tell them to default on the transaction. Basically, I can say that someone got a hold of my card or whatever. You cannot do that with cryptocurrency, and a lot of companies really value that. There's a transparent inflation rate, so we have no idea how much fiat currency is being printed by the governments of the world, but we know exactly how much cryptocurrency is being created by code, and that code is there for everyone to see and everyone to verify. There's a term being used now, digital scarcity, and that means that digitally controlled inflation and transparent inflation it's kind of a term being used, and that's one explanation for the rise in value. Political neutrality, there's some exceptions. I mean, some governments, Venezuela is claiming to be working on a oil-based cryptocurrency. So I think it's probably going to be outdated. But right now, most cryptocurrencies out there are politically neutral and completely separate from governments. Low transaction costs, I'll even challenge that one. Bitcoin transactions costs have gotten ridiculous, while others have been really cheap. But overall, most cryptocurrencies have a very low transaction costs. You know, it doesn't matter whether it's a very high value transaction or a very low value transaction. It's very cheap. And then borderless, again, I was speaking with a friend about moving assets from Korea to the US. And I said, well, you can just, you know, if you have a fiat crypto interaction in Korea, which I knew they had, you can just load it up and then basically just walk across borders or on a plane with your private keys. And basically your cryptos show up. Cryptos have no home. They have absolutely no home. They simply have a bunch of ledgers on the internet, and you can just walk from one border to another and pick up your currency. Now, that doesn't mean that you shouldn't pay capital, custom costs, et cetera, but I'm not suggesting you break the law, but in terms of portability, it's quite easy as long as you have your private keys. So just some unique risks. Exchanges in cryptocurrency are really undeveloped, still get hacked. We've seen a lot less hacks. In fact, I don't know of one in a while, but it's still out there. And most of those are inside jobs or user. I do know a lot of I have had personal experience with a lot of user hacks. But you know, cryptocurrency is different. So once you get hacked, it's quite easy to basically liquidate your account. I'll talk a little bit about that. So it's an issue. You have to stay secure. A lot of DDoS attacks, quite common, and then order slippage is also really common. Sometimes it's caused by illiquid assets. Sometimes that's caused by just immature exchanges or just overheated sentiment. There's no deposit insurance. That has changed with some of the fiat exchanges. For instance, Gemini has a FDIC insurance on the fiat portion of the accounts, but you don't have a deposit insurance on Bitcoin or Ether or whatever. No central quote. I mean, it's an issue on the site. So, hey Ryan, where'd your price come from? Quoting across cryptocurrency is not centralized. Government policy is still new and changing. I'm going to talk a little bit about that. There's, you know, I'm always, you know, on the watch for some bit of, you know, policy change that's going to make my activities illegal or the trading of currency more difficult, et cetera. And so I spend a lot of time actually reading and even in local visits to lawyer attorney panels, et cetera, to try to step on it. Future advances in computing may make the blockchain hackable. I think that one's like really unlikely as I read about it, but quantum computing is one of those forms of computing that is really advanced and may attack the blockchain directly, which right now is completely unhackable, the blockchain itself. But even as I read that, I'm seeing more projects come up where they're sort of undermining that. But we'll see. And then forks or updates. Forks is a sort of fancy word for versioning. We've seen Bitcoin go through 4 versions of software this year, and it causes disruptions. And most of the time, it actually results in free coins, which is kind of most people that have been in those forks have made money, including myself. But they do cause disruptions sometimes. It's basically every coin that we're talking about is a piece of software. So just like any program that's on your computer, you have to get it updated. I'm sure that's going to result in questions. Just some huge benefits. Low cost of entry. So I don't know if any exchange really allows 7 decimal places in terms of purchasing Bitcoin, but I do know 5 exist. So for example, right now, one Bitcoin I think this morning was roughly in the $15,000 range. You have a very low commission fee of 0.25 on most exchanges, and you could buy like basically a Starbucks espresso's worth of Bitcoin by using several decimal points. So if anybody wants to learn how to trade, I actually have openly suggested crypto trading, not as a learning base, not that you would throw like 10 grand into Bitcoin and try to play it, but you can literally learn how to trade with $5. And if you can grow $5 into $10, you might think about letting that run and see how big you can make it. Learning how to trade just like any other asset. That's very different from myself, who has very heavy exposure to cryptos, but it is still a nice base to learn. 24/7 market and few gaps minus slippage. What my point is that if you're trading futures, You know, if suddenly gold makes a run, or there's a run on gold just before the futures market opens on Sunday night, you start to see a gap. Same thing with the stock market. We see almost no gaps in crypto charts unless caused by slippage. It's a completely smooth chart that's running 24/7. So that's a benefit. So you don't have gap risk overall in your trading, unless you're trading, say, Bitcoin futures on the CBOE now. You have a real gap risk because Bitcoin can move a lot on a Saturday. You can easily move funds exchange to exchange from country to country within 15 to 20 minutes. There's some, government policies you have to be concerned with. I'll talk a little bit about that because I've done a lot of reading. But yeah, I own several exchange accounts in many countries now at this point in time to get access to different assets. And then there's, this is getting outdated, but there's less, I'll say less institutional money or HFT money, high frequency trading money. That's changing a lot. We now have, especially with the futures, we're seeing banks take position in Bitcoin and then use futures to hedge it. But a lot of the little coins, little cap coins that we trade, I can't imagine an institution wanting to be in it just because of the risk of liquidity. But that allows a little trader to make a lot of nice trades without those guys playing. That being said, I'm also in the large caps in a very big way myself. But for those learning how to trade, it's nice to trade apart from banks, as long as you understand that you're in illiquid assets. I'm going to describe the trade just overall. I mean, none of this has changed since August. We're really working in an accelerated time frame, return-wise, and accelerated risk. What I mean is that we're really working, sort of ridiculous returns, both sides of the trade, negative and positive, compared to any other asset class. There's a great risk to reward. Let's see, that's a bad sentence. Great risk to reward comparable. The risk to reward in a cryptocurrency is very comparable to a penny stock or an out of the money option in terms of that percentile return, even for the large cap stable cryptos. So what I mean is, in a typical trade is where we've got roughly 30 to 50% risk over our stop. That's just generally where most of my trades fall, but we're going for 100% to 10x trade, and I'm not joking. So as long as you internalize that 30 to 50% loss, and I'm using the Elliott wave approach that where we enter a 5 up with a stop at the bottom of the 5 wave move, it typically falls in this range, whether that be a long-term chart or a short-term chart. It does increase a little bit with some of the small caps, but with the large caps, it's in this range. I don't find it to be a day trade. There might be people out there day trading them successfully, and I day trade occasionally the ES futures, S&P 500. It's moving all the time. A lot of time the cryptos just sit. The move itself over time in a swing trade, say a week to 2 weeks, typical trades for me, can be literally this 100x to 10x trade. But just sitting and watching them like we day trade futures, I don't think so. It just doesn't work that well. I put price alerts on things and go sometimes, if I'm not doing analysis on the site, I'm out and about while this market's trading around me 24 hours, and most of the time it's quite fine. Pricing can be in fiat, Bitcoin, Ether typically. Making trade decisions is difficult if you're trying to get a return in fiat. So you'll see me, if you join the site, you'll see me take most of the charts and add an equation to get it to dollars and do the analysis in dollars. In fact, it's usually a smoother chart in dollars. But it's challenging for the trade because often the pricing is actually in Bitcoin or Ether for the actual trade. And I talk to people about how to manage that on the site, which I can't really get into here. But it's a challenge we deal with. And then the overall, it's kind of like a Forex trade because we're using symbols. So the first 3 symbols is the coin, and the second 3 second 3 digits in the symbol are the basis. So if I use this example of FCT BTC, that's Factom based in Bitcoin, or ETH USD, it's Ether based in USD. So the pricing will be that equation. The difference with Forex, of course, most Forex trades are on margin, and there are some margin trades in cryptocurrency if you're going to short or go long, but most of our trades are not. And generally, I wouldn't recommend to anybody go margin except for small bits once they're comfortable. We are starting to see regulated brokerage-based trades. GBTC is a Bitcoin-based asset. I say ETF and I say it loosely. The problem with it is a huge premium. because it doesn't have a controlled NAV. The company itself isn't buying and selling shares to control the NAV. But it is a trade that's available if you're very careful on your brokerage account. I do it in small amounts. And then we have the CME and COB future products based on Bitcoin, and they're out about a month. Again, that's a leverage trade, highly risky. I don't touch it. I don't give guidance on trading futures. I will trade ES futures or gold futures, but I will not trade Bitcoin-based futures, at least in this format. So again, talking about time scale, this is the same chart from last time, and it's out of date, but we had 85 years of return in the S&P 500, and we saw the same thing in Ether in 7.5 months. That just gives an example of when this chart was based on Ether from January 2017 to August when I gave the last webinar. This is what we're dealing with. Again, it's a trader's dream if you understand the volatility and you understand the risk. If you put small amounts, and again, I used to openly advise people, put in $500 to play, get a feel for it. If you get comfortable with the trade and how it works, you can add more, but don't put a lot into a volatile asset for the first time. I know there's some folks on the site that have been really gutsy, but just in general, that's my recommendation. I'm personally very comfortable with this market and love the swings, but that's after, what is it now? 5 years doing it. Here's an example of a snapshot. I took a snapshot this morning of Bitcoin. So Bitcoin in dollars, BTC USD. This hopefully summarizes what I'm talking about. From the low in 1,000 in the 1000s in January 2017 to now, sorry, excuse me. To today was roughly, I took this snapshot at 14,880 this morning. So that's a 14x plus return. And then our expected 6-month trading range using Elliott wave analysis is a low of 3,000 in this primary wave 4 of 3 to 65,000 at the top of the third. So that's just a giant range we're dealing with. But the benefit is you can get into this with a sub $100 investment with no leverage. You can use, for instance, if you bought, a 0.01 Bitcoin this morning, you would pay $148, and there's no extra commission to do that. So you can play around in this market for very low entry cost, again, to my point. But just understand that if you're going to put a heavier amount, then you're dealing with a very volatile asset class. Ripple is one. I describe Ripple as the big replacer of Swift wire transfers. This was a great trade for us. So in December, I was placing entries on this trade in the 16 to 20 cent range. Most of my personal holdings are in that zone. And within a month, we saw a run up to 272. So it was a fabulous trade. But if you we had to wait patiently for this one. We had a triangle, a chart form down at the bottom where it's just sideways forever. And triangles often create launches. So we knew it was going to happen, but we were super patient. And there's a lot of hemming and hawing on the site. But you can imagine if you're spending $10,000, we saw it sort of shake and rattle around 15 cents to 20 cents for a while, and that's a 30% range trade. And if you had put 10,000 closer to the 20 cent, you would have been frustrated during that time. But if you put a small amount, you'd be more likely emotionally and functionally to hang on to it. And in the end of the day, it really rewarded us. So that's just an example. And we don't think this one's done until about 350, and then we're really very much at risk. We're starting to take profit now, but definitely don't call it a short because we definitely go another 50%. So just a little bit of wisdom, from my learning. So don't leave stops on the market, contrary to trading wisdom. You can use stop limits, but the problem with crypto assets is I give a lot of guidance on what the trading range is, but there's other issues with the exchanges themselves. That doesn't mean don't use stops. Every trader should use stops. I just don't let them sit on exchange. Again, that's my preference. Really up to you. But you should have at least mental stops where you'll pull a trade if you get uncomfortable or the trade is really turning around. Again, start small. I just love this $500. Like we've had people on our site start with $500 and pay the $100 a month fee for the service from Returns Plus. Again, if you put $100 in a Ripple trade, you would have had $1,000 by the end of a month. Is every trade like that? Absolutely not. But again, it's a comfortable place emotionally and functionally to get involved in the marketplace. Think about them as lotto options again, or out of the money options without time decay, or penny stocks. Those are great analogies. A little goes a long way. You really should get comfortable first. Swing trades at double or triple are quite common. I've already said that 30 or 50% risk is often the case. Don't invest any more money than you can lose. I know people on the site that have gone a little too heavy, if you ask me. And I also opened several exchange accounts just to get a feel. Again, that has to do most with kind of the immature nature of the market. We're seeing some exchanges start bad, get developed, get better. So I like to open several just to get a feel for them. And I don't also like to have my assets in different spots in case a hack happens. I don't like any one large portion of assets. Again, I'll talk more about security, but I don't want a large portion of my assets in one place where it's vulnerable. So I'm going to go through 1, 2, 3, 4. I don't think we have time for me to demo it like I did last time, but maybe we do it at the end. We'll have to see. So the steps to start trading is first you've got to move fiat to cryptocurrency. So from the banking system to the crypto system, and then you've got to open an exchange account. So there are exchanges that do this fiat to cryptocurrency movement, but aren't necessarily great for doing the trading itself. And then so opening other exchanges for doing that trading, more of a trading platform, and then you need to move those those assets across. So you send the coin to the next exchange, and then learn about what to trade, and then trade. I'm not going to cover every crypto available, but there's a great site to look at the different assets, and that's cryptocompare.com, and I think I list that later in this presentation. So again, bank to fiat. I'm list just a few sites. So Coinbase.com, it allows a direct EFT, and this is in the US, EFT to crypto purchase, and they have Litecoin, Bitcoin, and Ether, and they just added Bitcoin Cash, which is a fork off of Bitcoin. And then Gemini is one I use as well, and they use Wire and EFT. And then finally, Kraken is another fiat to crypto exchange that also has trading platforms. And then you want to move the assets over to the trading platform. So here I'm just showing you a quick screen of the Coinbase account that I have. So it's pretty simple. So this is taken in August, and you've got 3 assets: Bitcoin, Ethereum, and Litecoin. They've added Bitcoin Cash, as I said earlier. So you would simply just open your account. You do have to get verified. In the US, we have very strict money laundering laws that requires that these crypto fiat exchanges know their customer. Actually, even just the trading platforms must know their customer, so that in case the feds are tracking money laundering. So you've got to go through a process of verification, put in your passport, social security number, all that good stuff in the US. And basically you would log in, you would hit buy and sell, you would pick your asset, how you're going to pay for it on Coinbase. You can do a bank account, you can add a credit card, you can also actually sell to PayPal as well. You can't pay for it with PayPal. You would put in a quantity. You can see that I have a $25,000 limit. I think it varies by experience or validation of you as an individual, and you hit buy. So it's pretty simple. And then this screen on the right tells me what I just did, and it deposits to my wallet. My wallet is what their name is for Bitcoin, but you also have a Litecoin, Ethereum, and Bitcoin Cash wallet. So once you have this assets, now I'm going to say real quick about Coinbase. If you use a bank account, it's going to take 7 days to have control of those assets. You can put a credit card, do it faster. What I actually suggest, and there are YouTube videos, maybe I can go to it later. If you use their partner GDAX trading exchange, so if you have Coinbase credentials and you go to GDAX, you can actually do free periodic bank to fiat. You can install fiat in your GDAX account for free, so you don't have any fees. Coinbase is a little ridiculous in fees, so I've moved most of my fiat transactions to GDAX. And their whole point is, if you're on GDAX, you're gonna pay trading fees. So if you're coming into this webinar not intending to trade, you may not do that. But if you want to save some fees, get a little familiar with GDAX, GDAX.com, which again is a Coinbase sister account. so that you can save some fees. So you can do everything that I'm talking about on Coinbase over on GDAX. It's just you have a trading platform in front of you. So again, where can you go to fiat to crypto? That's Coinbase. Local Bitcoins is, I think some of our Canadian friends have used it. CEX.io. I'm not familiar with that one, but before I gave the last presentation, folks said they were doing it there. Gemini.com, I use it myself. Kraken.com, I use it myself. SirBTC was one that was based in South America, and what I'm hearing is a lot of our European friends are using Coinbase. I know Kraken has one of the largest, even though it's based in San Francisco, has one of the largest crypto euro fiat transaction rates, volumes, or at least it used to. So you can definitely use that through Wire, and I think it's actually the same for Kraken. Is actually good for yen as well, is what I understand. Here's a list of exchanges, and again, I probably have an account in most of these, but none of this is an endorsement. What I want to frame this. There's a lot of, again, what I try to do is give kind of the ins and outs of exchanges. Coinbase, GDAX, that's again a direct fiat. Kraken, Gemini, those are all really great fiat crypto transaction spots, but they're actually limited in what assets you can enter. So if you look at Poloniex, Binance, and Bittrex, those are, and Bitfinex, those are ones that folks are using for trading a lot of the little small caps. So they have a broader asset base, but they're all crypto in and out, so no fiat. And what I'm going to talk about is how to exchange from your Coinbase or Gemini over to one of these exchanges. Again, cryptos are borderless, so it's easy to move things across. And then finally, these last two are Deribit and BitMEX. These are unregulated derivatives trading. Again, most people in the US are not going to want to touch this stuff just because of the laws. They're not CFTC regulated, but also, you know, trading on margin is dangerous. Don't do that to begin with, but at least I'm listing it there. Another thing I want to say is if you are in the US and you have assets over 10,000 in an external account, you need to file an FBAR. It's pretty easy. I actually just learned this recently, so I've got to file this here because I do have accounts at Binance as well. I think that's the only external that I have. It's not that hard, but it's all about money laundering. It's about keeping yourself above board policy-wise. If you need a reference, FinCEN, FINCEN.gov to get the FBAR forms. Again, really easy. It's just you state your value out of the country. Coinbase, Kraken, Gemini, and Poloniex and Bittrex are all licensed in the US and filed licenses with FinCEN, as far as I know, but I don't want to guarantee that. Please verify. But I have looked at their licenses myself. Okay, again, so what we were talking about was getting fiat into crypto. Now, if you're going to trade on Bittrex and Binance, which I place trades on and on the service, you need to move cryptocurrency. So here's an example, just using Bittrex. Every single crypto, we call them alts sometimes, alternate cryptos, are a little different, but there's this kind of theme. So you look for their deposit, withdraw, or wallet in the menus, and then you look for either deposit or plus sign to click on. Just a few tips before sending crypto. Do not send one coin to the address of another. So if you are sending Litecoin, for instance, make sure you're sending it to a Litecoin address or you will lose your assets. This is one of the difficult usable issues within cryptocurrency. Each address system is different. The only variation is what's called an ERC20 token, which is a side chain on the Ether network. The Ether network is a bunch of assets kind of working within the Ether network. However, I should have added a caveat to that. On exchanges, usually they have individual addresses for each ERC token. If you have a wallet yourself, like a hardware wallet, it's going to be one Ether address for all your ERC tokens. And we talk about on the site which ones are ERC tokens. If you have a question, maybe I can cover it in the webinar. But a source for that is etherscan.io to reference what's a token, what's an Ether token. Try a small amount just to get comfortable. If you've never done this before, you've got to try a little bit so you don't lose assets. Don't be distracted when you do this or under the influence. I literally know people that have been drinking and trying to send assets and lost them. Just, especially your first time, do it calmly. Again, what you're doing is copying an address from one to another, but it's a long string, and so you have to be careful. Double check at least the first and last 4 digits from what you copied to what you pasted. Again, I'm gonna show what you're actually copying and pasting in a sec. But the reason for that is there are copy and paste viruses out there that actually replace addresses so that you lose assets. Again, I'll talk about security, but overall, you've got to keep your computer clean of viruses. Okay, so this is a picture of Bittrex. So these are a picture of the wallets that are on Bittrex. The symbols are to the right. I cut a lot of the screen off because I have assets. I don't want to be displaying that, so to speak. But next to each asset is this plus sign and negative sign. Negative is for withdrawal. Plus sign is for adding, of course. So if you imagine yourself, here I have an example of the send screen in Coinbase on the right. And on the left, I've got what happens when you press the plus sign on Bittrex. You get this address or you get this QR code. If you're doing it mobily, you can just take a snapshot of the QR code. But if you're on your computer, you would copy this Bitcoin address and put it into the Bitcoin address in Coinbase, list how much you want to send, and then hit send funds, and that's it. Just one little tidbit we've learned: Bitcoin transactions have gotten very high. That's because of the nature of the code and kind of the clogged nature of the network. What we're doing now is buying Litecoin and using that as our cross-exchange crypto. So buying Litecoin on Coinbase with fiat, again, credit card or bank transaction. And then when we have control of the assets, we're going to Bittrex or Binance, finding the Litecoin address, and then sending it. Litecoin transactions are very cheap and they're very fast. And that's just because of some code updates they've done in the last year. There's even rumors right now that Amazon is going to use Litecoin. I don't know if it's true, but I can see based on how fast and cheap that transaction is that it's going to be desirable to companies. And of course, Litecoin's appreciated a lot in pricing. It's been one of our big trades. So need for security. I want to explain this really simply. The difference is that when anyone gets access to your accounts, your crypto accounts, it is very easy to liquidate them. Just like I showed you how you take one address from another, one account, and input it into another, you can send funds. It's the same way if somebody gets access to your account. So you've got to keep every aspect of your credentials completely in your control. These companies, if you're the source of compromise, none of these exchanges are going to help you because it's not their fault. So you have to keep secure. Now, an inside job for where an exchange itself is hacked and lots of funds have gone en masse, a lot of people have been able to recover. The exchanges have paid back over time. Now, of course, there's the horror story of Mt. Gox that in roughly 2012 that went bankrupt in Japan. It was one of the first exchanges. But some of the recent hacks, folks have gotten paid back. But if you're the source of compromise, you are not going to get your funds back. I guarantee it. So there's a lot of personal security needed if you're going to play in this space. Talk a little bit more about that. Just so you understand, every blockchain transaction has a public key and a private key. So the public key, like you just saw one of my Bitcoin addresses when I showed you, but you can't do anything with that. You can't take any funds from me. I did not display the private key. And of course, when you have a crypto account, the account has your private key in custody for you. If you have a wallet file on your computer where you're storing your assets, you have control of the private key. And so I recommend, at least for some of your assets, if you want to play in the space, to get used to doing that so that you have custody. But the point is this transaction is a broadcasting of the public key and private key to the network to create a blockchain transaction. That private key is what puts you at risk if you lose it. Common vectors of user attack. So phishing is when user credentials are stolen. It can be via a phishing site, an email link, et cetera, et cetera. This can even include 2FA, second factor authentication, which I recommend always using. Talk a little bit more about that. But there are robots that are so fast at when you input your credentials into a fake site, they will take down your account on the real site within minutes. That's how many people are hacked. So you have to keep your credentials safe. Don't hit any links in email. I even suggest bookmarking. And as soon as you have credentials on a website, bookmark it on your browser and never go to Google, because there have even been fake sites that have, through Google Ads, placed at the top that people have gone to and lost their assets. Key logging viruses, of course, that's a common virus, but it's even more dangerous now. Copy and paste viruses I talked about. Check the last 4 digits anytime you're doing an address. If your addresses are going in well, you don't have a copy and paste virus. But again, I still do it just as a practice because I have a lot of exposure in the space. Be careful participating in ICOs. That's really popular, especially with some of our members. I've done it myself. ICOs is initial coin offering, and these are new coins with no price history, but interesting projects. A lot of our members do that, but there have been a lot of hacks with fake addresses and fake placements, and even just completely fake coin offerings. So I wouldn't do that unless you've got like money just to play with personally. That's just my take. But I also know a lot of people that made a lot of money off ICOs. Just some rules. This wasn't in the last presentation. Stay clean and free of viruses, of course. Use a reputable antivirus software. Run that scan a lot if you're going to play in this space. Use two-factor authentication for every single account without any, don't just do it. I have slide 10. I don't know if that's the right slide now, but I'll show you real quick what those apps are. Again, they run on your phone and they give a rotating digit that you need to input after your normal credentials. Once you've established an account, again, bookmark it. Don't go Googling it. Don't get phished. Never click an email. I don't care if you get a security email from the supposed exchange. Go to the bookmark, log in, and check, see what's going on. It could be a fake email. No exchange is going to send you a link to log in from an email. That's just a given. I like to use unique emails for every cryptocurrency exchange, and they're not public. So no one's going to go ryan.wilday@gmail, send me an email and try to hack me, because I don't use that. That's my normal communication email. I don't use that for cryptocurrency exchange. In fact, each one has a unique email. Don't mix your everyday email. I just said that. Double check each time you copy and paste. I said that as well. And then also back up all private keys and 2FA keys. 2FA keys are what are given to you by the exchanges once you set up 2FA. Back them up to a thumb drive, put them in a safe, or encrypt them, put them in cloud in some hidden way. I don't know, put them on paper and put them in a safe. Do whatever you can to keep those private keys safe. They're different. Again, if you have an exchange, you don't own the private keys. They're in custody of the account themselves. But if you have, say, a wallet file on your computer, you may have to Google it to find out where those private keys are, but they're buried in your machine. You want to copy that. And again, you're pretty safe from hacking unless somebody gets full access to all your files. But if the private keys, you want to back them up simply because if your computer goes out, you really want to get your assets. But in backing that up, you have to do it in a safe way. So, again, a lot of people even do it on paper and put it in a safe. Just real quick, I talk about wallets. Wallets is a little bit advanced, but I suggest learning it. If you're curious about a wallet, you would go to the project site. So here's an example of Nextcoin NXT. It's one of our big trades as well. The one on the left is Litecoin. You would go to their website and you would download the wallet file. There's other ones like Exodus.io. It's not necessarily considered high-end security, but I use it for small bits of assets. It's very user-friendly and multi-asset, meaning it's got Litecoin and Bitcoin and all of them in it. So there's different versions of this, but you can learn about wallets simply by getting on Google and reading. If you're trading some obscure coin, I suggest reading reviews about the wallet. A lot of the standard ones are safe, but I've heard viruses have been embedded in some of the very obscure assets. I personally don't download wallets from the smaller coins, but I've got wallets for some of the larger ones on my computer. Let's see. So you want top-notch security, get a hardware wallet. I don't know. I've got like a small army of Ledger Nanos now. Nanos hold about 4 coins each, and they have to write the software, so it doesn't hold every single coin out in the universe. But I've got a small little army of Nanos to cover a lot of my assets, and those things are hidden in a way where no one's going to get them unless someone really wants to do physical damage to me. Anyway, but it's probably the most secure. Basically, the private key is basically embedded in the chip and is only broadcast during a transaction, and it's basically impossible to hack. You just basically unplug it when you're done transacting. You don't even have, and one aspect of wallets is the transaction is not local to your computer. It's in the blockchain. So if I'm sending, I keep a record of all my addresses. So if I'm sending a transaction to my ledger, I don't have to plug the ledger in to receive it. The blockchain receives it. If I want to see it later and control it, I need the private key, so I need to plug in my ledger. So it's a little trick. So you don't have to plug in your ledger on and off when receiving, and that keeps you kind of offline. Two-factor authentication. Again, every single crypto account I use, I have Authenticator or Authy, depending on which account. But these are smartphone apps or computer apps that are rotating code. It's still compromisable if someone gets a control of your phone. Again, every crypto exchange produces a private key when you set it up. You need to back that up. That means if you lose your phone, you can get that private key and restart your Google Authenticator. Otherwise, you kind of have hell with support trying to get them to let you back in, because the point is it's supposed to lock down your account. But you have to use that on every crypto account, or you're just really not basic level security. Policy and taxes, a lot here. I'm going to say right off the bat, pay your taxes. Don't use crypto trading to get around taxes. I know some people do. They will get you, at least in the US. There's a lot of what the IRS right now is systematically doing is getting access to the crypto fiat exchange, so they know who's moving in and out of the banking system. I'm large enough; they'll spot me. I'm just going to pay my taxes. I really think that the U.S. is soft on regulation in this, or I should say fair. If you look across the board, each regulation body has got a different take on it. The SEC right now has stayed away from Bitcoin, Litecoin, those assets that don't represent a security. But there are some ICOs that they've deemed securities simply because they allow you to profit from the activities of the company that has funded. That is a security according to the 1934 Investment Act. I'm probably misquoting it, but they have decided to set policy on those and even pursue companies that are placing ICOs in the United States that have been deemed securities. Otherwise, the CFTC has deemed them commodities and regulated as tradable assets. So that's good for us traders. But also, three down, contrary to popular belief, Bitcoin transactions are not anonymous, or a lot of coins. The NSA has figured out how to track them. So you're not going to get away. You're not circumventing the government in any way, shape, or form by trading cryptocurrency. There are some privacy or anonymous coins that are in development, and then there's some very advanced ones. So that may challenge them, but I guarantee you the NSA is going to try to figure something out. You're not gonna be able to get this link, but you can go on Wikipedia and look at the current policy of the United States. Again, I don't recommend avoiding taxes. And then the recent add to this is the FBAR. I didn't know this, but if you have an exchange overseas, it's over 10K in assets, you need to claim it just like an external bank account or foreign bank account. And it's not hard. I looked at the form, really easy. You just put in what asset level you've reached during the year and addresses, et cetera, et cetera. And I'm not going to say too much about crypto currency taxes because I've gone through it, but I've got to go through it in a bigger way this year. It is classified as property according to the IRS. I can say this, that exchange reporting is really not as complete as brokerage account, so I've got a lot of work to do. But there's a couple resources. There's one that I do forget, but Bitcoin.tax is a service that allows you to run your CSV files from the exchanges through to get to a taxable. I haven't tried it myself, but I'm about to do it, of course. Other than that, if you want to make it easy, just trade less so that you have only a few transactions, and every account puts out a CSV, which you can get your dollar cost, et cetera, et cetera. I'm going to skip this real quick. Well, I'll talk about it real quick. Sorry. Recommended sites and tools. TradingView.com is what I use for most charts if you're interested in trading. In fact, on our site, because the Elliott Wave trade system uses log Fibonacci's and TradingView didn't cover it, we've actually coded a log fib tool, which we share on the site if needed. But also, MotiveWave, I mentioned MotiveWave here. It recently added a feed from CryptoCompare.com that allows us to catch some of the cryptos in MotiveWave software. If you're familiar with it, it's great for Elliott wave analysis, and that's what I'm trying to use for as many charts as I can. I'm covering about 40 to 50 charts on the service, and I'm trying to do as much work as I can. Blockfolio and CryptoPros are some nice pricing apps for phones. Let's see, there's some news sites, those are helpful. Medium.com has got a lot of nice writing on everything from security to trading to whatnot. It's a great place for blockchain writers and traders, et cetera, to share. I've been planning to write articles on it, but I haven't gotten to it yet. And then you can follow me on Twitter, of course, but you can also follow a lot of the projects, the coin projects. Just look up, say, for instance, Bitcoin, and you'll find the Bitcoin developers, or Vergecoin, or whatever. Okay, so now that's the end of, hey, Thomas, why don't we take questions at this stage, because this is kind of the end of intro.
Absolutely. So we do have one, so just get everyone like to ask you, use the questions box. You can submit a question. For those of you that were here for mic and video check, that's that same box that you were using when you were giving us confirmation you could hear and see us. So the first question that we did have come through is, do you have to file an FBAR if more than 10K stored in an offline wallet?
That's a debate, actually. I'm reading up on that now. There are lawyers right now saying that's highly recommended, especially since this whole policy area is forming. I'm probably going to do it myself. I think I have about 15 wallets, and the FBAR is not hard. Again, if your idea is to be an anarchist and avoid policy, go right ahead. But personally, this is one of my modes of business. I'm going to be, just proactive. And I'm probably going to file every single place of assets that I have. But there's a debate going on right now amongst attorneys that it's really needed.
Can you trade these coins, or any of them or all of them, in any type of IRA or 401k account that you're aware of?
You can actually, so I haven't done it myself, and I plan to. You can set up a self-directed IRA, and the reason there are companies that are doing it, but I tell you what, I want control of my assets. Again, very little of my assets are left on exchange personally. I'm not, except what I want for short-term trading. Most of my assets are off exchange. So my personal point of view is I want a self-directed IRA, which is basically a legal arrangement with yourself and the government that allows you to control the assets, but they're identified as retirement assets. I understand. I haven't finished my reading, but I understand you can do that, and then you can hold your private keys, your wallets, etc. They're just earmarked as IRA assets. That's my understanding, but I need to read a little bit more myself.
That's interesting. And you mentioned an ETF earlier. You did also mention that it had a very high premium compared to just buying the coin itself. I think it was a Bitcoin. What is the symbol of that ETF, and are there any other ETFs that you know of that are trading?
Yeah, GBTC. So Bitcoin symbol is BTC, so just add a G, and that's probably for Grayscale Investments Holding. You can read about it on Grayscale's site. Again, my fear on that one, I'll just say real quick, is that we see a collapse in Bitcoin, or we see actually a release of a real ETF that has no premium, and then that premium collapses overnight. So I take it for short-term trades in very small amounts, but I do not, to me, my main Bitcoin holding is in the real deal. So that's the aspect of it. I do think we're going to see ETFs come online. Right now, the futures have, in the last month, been released. That gives kind of an index pricing for the normal market, so to speak, quote unquote. And I think we'll start to see those indexes, which are actually put out by the exchanges. So the normal markets, so to speak, the exchanges, CBOE and CME, are actually indexing with real crypto exchanges. Gemini is working in that, and Kraken is working in that space. And then you'll see those futures be used to index the ETFs. So we're seeing a progression of release of products into the normal markets, normal exchanges. But right now we only have GBTC.
And is the general reason for the premium that it's for let's say the regular investor, those with a current brokerage account, that GBTC is just so much easier to buy, that at least maybe what their stance would be is it's worth it, as opposed to having to go through the process of setting up an account? Whereas if that even gets more easy, more regulated, or even, let's just say, more structured, that we could also just see that premium degrade, so that you could actually see Bitcoin hold its value, but the the ETF lose value because of the premium
Um,
loss of
my
premium?
understanding, my understanding of the mechanism. This is my understanding of the mechanism, and maybe somebody can correct me. In a normal ETF, the company buys and sells shares of the asset itself to manage it against NAV. So if for instance, in a gold-based ETF, minus the management costs, the company is buying and selling those shares against gold to make sure it stays close to their target. This one, Grayscale Investment has said this is 0.09 Bitcoin each, and they've surrendered the buying and selling of shares completely to the market. So if it's in demand, the premium goes up. And so you can imagine a normal ETF that's managed properly. I say properly, quote unquote, comes onto the market. Everyone buys that and sells Grayscale, or even shorts Grayscale if you can borrow it. So you can imagine that premium collapsing overnight. Hopefully that makes sense.
Absolutely. So thank you. So after you go from fiat to crypto, what's the point of the exchange? Just to trade crypto like trading stocks?
Yeah. So again, if you look at that table, which we can get when we get this online, people can freeze frame. If you look at that table, a lot of the crypto fiat exchanges have a very limited asset base. So Coinbase has 4 coins. They're all large cap. If you want some of the little fun stuff, I call them the little fun stuff because those are some of our bigger trades, but very volatile. You have to send over to an exchange, a crypto only in and out exchange. So it's a lot of, like, I trade on GDAX. It only has Bitcoin, Litecoin, Bitcoin Cash, and Ethereum, all large caps. I'll trade most of the time there for those. But when I want to buy, say, Verge, which is one of our big long-term plays, with a lot of trade skew, as I call it, a pretty heavy risk situation, but a much heavier gain situation using Elliott Wave. I have to send Litecoin over to Bittrex or Binance. So a lot of my trades, so I think actually 60% of the trades are small caps right now, because the big caps became very mature very fast in the last 3 months. And I don't see the risk reward there. So we've been making a lot more trades in the last month in the small caps. You can't take any of those trades if you're on GDAX.
Would you recommend getting something like a Chromebook with something with very minimal preloaded software just for trading your cryptos?
Yeah, that's a good point. I didn't bring that up. I think it's highly advisable. So if you use a Chromebook and all you're doing is going to the bookmark websites in and out, and you're not going anywhere else, you're pretty darn secure. You're not gonna get a virus if you're not clicking on any links. You're keeping it separate from all your other files on your computer and any programs you're running, say if you've got a business or whatever. So it's really safe. And I have a Chromebook. I use it maybe 50% of the time. I'm most often just watching my my computer for signs of malware. But I'm actually changing my setup, so I have another monitor attached to the Chromebook, so I can just go over there and trade. I highly advise. That's actually like advanced security, or just one of the steps of advanced security, and highly recommended. There's also virtual machines. So my machine is a Mac, and I also run Windows on the inside. I haven't kept Windows off of the web enough, but if you say kept a Linux boot, or run Parallels and have Windows running, and you only take Windows into the crypto exchanges, that's actually a pretty safe way of trading as well. But you just have to never click on a link, especially in Windows, because you may get malware.
Very good. So we've got a few. So this was a good place to stop. And if this one's a little too detailed, please let us know, and we can, or Ryan, let us know, and we can maybe work with this person offline to get a little bit other information. But I have a wallet on Mew and need to back it up. Can you talk more about storing ERC20 tokens on the Ledger Nano?
Yeah, I wish I can demo it. So ERC tokens, none of them have addresses of their own. They're all the addresses that, say, if you extended ERC token to Bittrex, it is an Ether address, and they're all side chains of Ether, I guess is the best way of saying it. When you're using a Nano with, I think you said with Mew, right? My Ether wallet. My Ether wallet is basically an interface to your Ledger. It's really convenient, really easy to use. You would, I think hopefully you've gone through it, but you attach your Ledger to your computer, you go to MEW and you unlock it. Again, this is a very safe way of trading, so long as you go to the right MyEther site, which is myetherwallet.com. And then once you hook up your Ether, your Ledger, there's a little down in the bottom right corner. There's show tokens, and you'll see all your tokens, all your balances in there. It's pretty simple that way. And then in the sending transaction, you can either choose to send Ether, all of your stuff, or your tokens. But what I again emphasize is you can't send tokens to an exchange's Ether address. That's the difference. So if you have control of Ether addresses private keys, which you do in the ledger, then and the ability to transact with it, like through MEW, you can just use that one address for all of your our ERC tokens. And we talk about this a lot more on the site. And again, a lot of trades are made on ERC tokens. So they're some of the best small cap trades. So this is about as far as I can talk about it. But there are a lot of videos, a lot of YouTube videos on MEW with Ledger and tokens that you can look up, and you can see people actually do it.
That's really helpful, and that question was Jim's. So Jim, it's a great spot to just interject something, which is around the service. For those of you that have never tried EliteWaveTrader.net, period, or maybe have tried the service but have never tried the crypto service, I do just want to interject. There's a lot, along with just getting Ryan's analysis every day on multiple cryptos. There's this huge community of people talking about what they're experiencing, what they're trading, and also just helping each other kind of just hash out what they're going through in the cryptos. You'll sometimes see things like, hey, I just put in to send X to X. It doesn't matter where, and I'm seeing a delay, or is anybody else experiencing that? So you kind of are inside of this community as well, just kind of all going through these same processes at the same time. Ryan, maybe you can probably talk a little bit better about that than I can.
Yeah. No, it's interesting. I mean, the other day I was like doing my analysis and someone posted, I'm going to send my XLM to my ledger. I was like, no, don't do that, because XLM is not an Ether token. So we catch each other as we're learning. I advise people to go slow. I think, we've had developers on who actually really understand blockchain technology. So they're really into this from a fundamental perspective. People ask me, like, what do you think about this project? Well, I haven't had a chance to read on the project, but I do like the chart because I'm the chart guy. I completely avoid weighing in on projects from a fundamental standpoint. I am highly successful trading with just charts. But I really respect people coming on and saying, hey, this project's really trying to tackle a really interesting problem with blockchain. I love that discussion and totally encourage it. That's just not part of my analysis, but it's an awesome community. So hopefully that makes sense.
And a little bit more to just interject this, kind of a little bit more from the outside. What you just said there, that was something when we did this webinar a few months back, we were talking about places you can go to get news. And there's still great places you can go to get news about cryptos, but you really could, if you wanted to, just sit in the crypto room at EliteWaveTrader.net.
No, it's true. Yeah, it's true.
And find out so much about what's going on, and get counter pieces, and get other developers' insights into what the article's saying. So of course you would still want to do your own due diligence, but it is kind of amazing how much that part of it has changed as well.
Yeah. No, I mean, like, the community, actually, a lot of members of the community know a heck of a lot more than I do about blockchain. I mean, I'm again, like, you just back to the intro. I come from a trade perspective. I'm transitioning from a corporate life to a full-time trader. I'm a charts guy, but man, there are some people really knowledgeable. And the security stuff that I just talked about, that was all influenced by people in the room. I mean, I was somewhat secure when about 3 months ago when I started the service. I'm on lockdown now. And anyway, it's a great community.
What sort of due diligence do you like to do on tokens and maybe even particularly ICOs?
Well, so first of all, I don't have time to play the ICO. Like, when people have pushed something and I found it was an interesting project, I've made really nice money in the space. I do drop Ether. Ether is usually the avenue to play ICOs. I might drop like 1 Ether, which is like right now $800, into an ICO. That's just money that it's just profit I've made. I don't have time to read the white papers, and then my personal technical capability. In my background, I'm a product strategist, and I've invented products that are on the market, but not code. And so I just don't personally have the bandwidth to really educate myself that well. But what's amazing about Elliott Wave is that it actually foretells price gain without even looking at the projects, which is a little bit dangerous to say that it's a little bit dangerous to say that every single count that I come up with and analysis I come up to right. That's not what I'm trying to say. But we have caught amazing returns just pre-news. I mean, it happens in the stock room too in Elliott Wave Trader. Well, when there's a setup that looks bullish and then earnings comes out and pushes it. We see that all the time. We see the same thing in the crypto space. Elliott Wave, I got a count out. I think this one's going to be a big one based on the setup, over the last year. And I think the next year is going to be a big one. And sure enough, and then we get news that actually backs it up. Probably because there were a bunch of folks buying in early that knew what was going to happen. I didn't though. I just saw the setup. So I literally personally turn off. Sorry, I just dropped the mic. I literally just turn off my brain and look at charts. That's just the person I am, and I trust it based on what I've learned on the site as a member. But some people are just trading differently and kind of want to know a little bit more. I'm just focused. That's all.
That's a great place to be. So, and I might ask George if you could. George may need to clarify this just a bit, but he says, I know you're not associated with the exchanges, but I get an error message to try again later, those quotes, every time I try to enter a funding account, whether it is credit card or bank account. Is that a common problem? I, again, didn't mention where, so I don't know if you need that information, but have you heard anything like that across maybe it be Coinbase or?
There's a constant problem. I mean, I don't know which one he's on, but I haven't had that specific problem, but I have login problems all the time. I've been happy with Bittrex performance. I used to be on Poloniex and they had big issues, and I used to be on Kraken. I used to do most of my trading on Kraken actually with the small cap trading on Poloniex, and I've left both exchanges. And the problem with Bittrex right now being a great exchange is that they're so inundated that they're not taking new accounts since December 15 because they want to get some new servers online. So I think they're going to start up again. I'm following their Twitter. So a lot of us are going to Binance now. The problem with Binance is it's in Singapore and it's working great, but now we got to file FBAR. So it's the whole world sucks. I'll just say it that way. The whole crypto world sucks. It's the returns are amazing, but sometimes the pain, you have to decide whether it's worth it to you, unfortunately.
So I don't know that you'll use this terminology, but the question is, and assuming cryptos, is it a normal market basically with the caveats to be careful about position sizing, money management, and I'm going to throw in security.
Mm-hmm.
But it's a normal market in terms that you're buying an asset, then selling it if you have gains or losses.
Yeah, and I think in that respect, yeah, it is absolutely. And again, the amazing thing to me was as I was learning Elliott Wave, I put myself under the tutelage of Avi and Mike and Garrett's videos. I always claim Garrett's videos as changing my life. He is, for those that don't know him, he's one of the Stock Waves guys, and he made some great videos, education videos on the website. And I'm passing that on. Like it changed my life. These things follow Elliott Wave, which is based on tracking sentiment. So in that regards, it's normal like every other market. But no, I mean, we're dealing with, I mean, there, again, advantages, disadvantages. I like playing without the banks playing in our space. That is an advantage. That's also not normal because banks and big guys that are in HFTs are inhabiting all markets now. I get to sort of dodge all that, at least with some of the assets. It's changing though. But in terms of security, it's not normal. In terms of immature exchanges that don't work technically as well as say a brokerage. I mean, we see brokerages go down, but we see crypto exchanges go down off and on. I've just gotten used to it. That's another reason why I take a lot of the assets off after short-term trading, so that I don't have to, I don't have to sit there and stress with, say, 90% of my crypto exposure on an exchange that's down. Especially since my exposure has climbed over the last year. So it's not normal. I mean, there's nothing normal about this, but it's probably, I now spend all my time trading cryptos, and then when I need to make a stock trade, I go look over what Zach's doing or what Garrett's doing or what Avi's talking about in the indexes. I just don't have time for anything else, of course, with all the analysis I'm doing. And I'm doing well in stocks with those guys' guidance, and I'm doing very well in cryptos right now with my own analysis. So yeah, anyway.
So what is the point of cryptos? Another question. Besides a trading game, can you use these to buy things?
Again, we will see. So yes, you can use Bitcoin to buy things. It's limited. I can buy bullion, gold with Bitcoin. I can show you a link. I'm not sure if Tesla is still doing it. You used to be able to buy a Tesla motor car. There was a big real estate transaction in Texas that a friend showed me. I think he was going to join this webinar. He showed me that happened down in Texas. So you can buy things with Bitcoin. I'm sure there's a lot of private bartering going on with Bitcoin for sure. There's moving of capital and international payments being done in Bitcoin. Is it an everyday merchant purchase? No, it's actually a terrible experience. Like if you go to a store and try to buy a Bitcoin, right now it'll take 20 minutes. You would never use it that way. That probably will get cracked soon with secure mobile wallets, not with Bitcoin, but with something like Litecoin or Verge. Quantum and OMG or some other coins are probably going to hit that space. But there's other things that, again, a lot of cryptos are actually not meant to be transacted as a merchant. Again, like for instance, I'm selling part of my hard drive space, renting it out. The payment is in an ERC token. It has to be in that token because the whole encryption system for those folks' files that are on my computer to protect them against me going into them is all based on that blockchain, and the payment is on that blockchain. So you create that use case without that token. That token is a necessary transaction payment system for that use case. Does that make sense?
It does. I hope it makes sense
So
to everybody.
yeah. So I mean, there's a lot of the cryptos there where they're creating a new use case and they're creating the means of transaction within that use case. And they are actually creating, if they get market share, that coin is protected against dilution, or protected against, sorry, competition, because you can't just make a different transaction medium on that blockchain. It has to be native. It's part of the security. I don't know if that makes sense. I mean, that's kind of like probably bad way of paraphrasing tech, but it's basically the way it works.
A question about a platform that's calling itself at least being asked as an all-in-one platform, and I'm going to spell it out: COINIGY.
Yeah, so Coinigy. Coinigy is this is the way I understand it. I've been meaning to set up an account. Coinigy is a trading platform that directs orders through API to the different exchanges, and I think they've got access to just about every exchange. I have a personal issue with putting an API. So an API is basically a portal for your own account to control your own account from something mobile. So like if you set up a mobile account for a trading platform, you have to API it. You can give an API withdrawal credentials, or you can give an API order making credentials. The issue I have is I don't have time to spend setting up that API to be totally secure. It probably isn't that hard. I've done it, but it just takes time being careful. But other than that, it's kind of nice to have that Coinigy, basically controlling your whole crypto world from one spot. That's basically what it does. You don't have to log into all these accounts and like move money all around. You can do it through Coinigy, is what I understand. It's just that you got to set all the APIs for all of your accounts into that Coinigy system. I also don't know whether Coinigy has access to those APIs or just you. I'm sure it's secure, but I just haven't personally done due diligence.
Is storing coin on a generic encrypted hard drive fairly secure versus, say, a nano ledger? Yes.
I think it's fine. I mean, I think that's totally fine as long as you have another copy of that private key. It's all about the private key, right? If that hard drive cracks and you don't have a copy of that private key somewhere else, you're out of luck. But if the hard drive is offline, it's not going to get it. Again, I'm not a security expert, but it's very rare for somebody to have total remote access to all your files on your computer. If you encrypted your own hard drive on your own machine with your private keys on that, you should be fine. Someone would have to crack the encryption. Doesn't matter whether it's a hard drive that's offline or a hard drive that is online. That's my understanding about security, but I'm not an expert. But you got to still have copies of that private key, because if your hard drive ever cracks, then and you don't have access to that private key, or it's not retrievable, then you lost your funds.
So I think it might be good to start the presentation back We can also circle back at the end to get to some more questions. Some are looking a little bit more redundant, things we've covered about ETFs and that.
Sure.
And again, we're probably not going to have enough time to really dive into any specific coins or pulling up any of the ETFs to look at them. Did just want to share a very interesting piece before, as Ryan, as you get ready to jump back into your slides. We get this. I'm a real estate broker in South Florida. There are currently more than a dozen properties in the Miami area that are advertising themselves for sale in exchange for cryptocurrencies. One is exclusively accepting Bitcoin. So there you go. There's
Cool.
if you're
Yeah.
looking for a vacation place.
Yeah. It makes sense. It actually makes sense. I mean, it's easier than wiring, if you ask me, but that's just because I bought in, basically. Anyway, so just real quick, I just want to give us a quick, this is a little bit of marketing, of course, but I wouldn't do this if I didn't believe in it. It's just not the person I am. I want to give you a quick little outline of how this all works. What's involved in the service. As I think Thomas raised a great point. I mean, I didn't even talk about that here, but you have the whole community, and when you get into the service, you can come in and post. Once you're off trial, you can post all you want and message me. I don't always have time, but you can message me, you can message other users. I mean, it is a community, and I didn't write that down here, but I think that's a huge benefit. You'll learn more things from other people as much as from me. So there's three, I should have separated them, but there's three big components: the big cap portfolio, positions table. There's also the speculative. I call it speculative, but lately it's been most of our trades of tokens. I call them post ICOs because you really can't get enough price action on an ICO to do good Elliott wave analysis. But when it's mature enough, I'll pick it up if it's bullish. And then short-term trades, swing trades, when I see it, those are a lot less. I think a lot less of a hit ratio, but that basically, for me, a short-term trade, I'll add some margin, a little bit of margin to my exposure when I do a short-term trade, and then stop out real quick. Some people are just basically using that to sort of push their exposure. And then finally, all of that, those three components have position tables and notifications, so you can set to have email alerts, say for like, if you're interested in the long-term trades only, you can have set to notifications if you don't have time to hang out on the board. And then day-to-day chart updates. I must do, I don't know, Thomas, what do you think, like 50 charts a day updated requests is something like that.
It feels like more, but yeah, it's got to be something.
Yeah. I mean, some of them are not worth like updating them. I haven't moved, but I'll do it anyway just to make sure, if not, just take the old version of it. But, if I catch something big change in the chart, I'll update it on my own. And then I take lots and lots of requests and talk about analysis. I'm kind of rapid firing these days, and I think I'm going to try to kind of manage some of that down. There's an effort I have this week to look at every single coin and like do my, I don't want to say hot list of 2018 because it sounds pretty cheesy, but I want to at least, what are the most promising wave counts for 2018? It probably will be a quarterly thing. So that's probably going to be added to this. It's not a notification thing, but I'll do a big quarterly post on what is the best long-term. And it's based on using our Elliott wave targeting method, which is called Fibonacci pinball, and using it through a spreadsheet to kind of figure out projected return. So I've started building that. I gave kind of a primer of that today, but I'm going to be releasing that this Saturday. And then Elliott wave trader education. I became, I was a profitable trader before I joined Elliott wave trader, but I'm immensely profitable now, and I like to pass it on. I mean, hopefully you can hear it in my voice. I do that so that everyone gets better. So I don't only talk about analysis, but I talk about position sizing, money management, how you use an Elliott wave trade count analysis effectively. If you don't want to learn it, that's okay. How do you trade it effectively? So that's like, hopefully you can hear it in my voice. That's like the most passionate thing, I think, because I'm making money doing it and I want to share that. And it's really genuine. So just a little look. I mean, here's a typical chart. I actually just did this one today. I hadn't even looked at it, and it was when I said, "Wow, this one looks great." Not only is the circle 1, 2 in the right spot, but the parentheses 1, 2. I forget what degree we call that. Is in the exact right spot Fibonacci wise that we'd expect to drive a third wave. So this is an example of a typical analysis. And if you've been on EWT in the indexes, you've been in my crypto room, you realize that our Fibonacci's matter. If our count turns out to be wrong, the Fibonacci's let us know very quickly, and we stop out of the trade, or we look at a different pattern. So, you know, this one should be driving. I mean, what's the target? It's $1.43 right now, and I have the next little third at the 450. So that's a 3x trade, and this is a snapshot today. So it's a very typical trade, a very typical example, and this is based on an hourly chart based on Bittrex. So this was a fresh snap chart today of performance in the small cap portfolio. I'm almost like embarrassed, but you know, and I'm going to emphasize again, past results are not future indicative of future results. But we've had a big movement in the market off of what I call the wave 4 bottoms, the wave 2 bottoms of late summer. And so we've took a lot of heat actually, and you know, and I'm gonna be fair. If you go down the chart a little bit further, we took a lot of heat and we stopped out of a lot of trades in the July to August timeframe. But as I kept saying on the board, yes, but we're near the end of the wave 4. I mean, you can look at a lot of my past posts. I think actually people can get in free to see a lot of my past writing. I said, you know, I posted such educational posts as, hey, this is the end of wave 4. This is what it looks like. You guys are all frustrated. This is what wave 4s look like. Hang on, and here's our support zones, and then this is what's coming. And I put out a lot of projections for the wave 5. Well, over the last month, we've seen that come to be, and you can kind of see the returns. And that's just taking a lot of heat, taking a lot of patience, not putting too much money into it that we can't emotionally manage our own positions, and then just riding it until the clear profit-taking targets. We've been taking like 30% off, 30% off, 30% off as we go, and even actually getting a chance to take some of those profit points and put them into laggards that were just escaping their wave 4 and wave 2 bottoms. You know, here's a micro count. I can't remember when I took this snapshot, but you know, this is a typical picture of where I will draw a support region and a target region for, say, in this example, the wave 4 and 5 of a third. And you know, I'm going to tell you, all of these boxes were drawn before the market came there. So when we hit that parentheses 3, which is a minor third wave top, I didn't have any confirmation that it was going to top at that point in time, or maybe I did, I don't remember, but I did say when it's ready to top, this is our target support for 4, and it turned there. So you know, any member that's been with me for a long period of time, these areas matter. That's what Elliott Wave, Fibonacci, Pinball offer us. And then again, I got a target region for profit taking above. So that's a very typical piece of analysis right there. This is actually, this is going to go up on the site. I wrote this for, this is a picture I created for a Seeking Alpha article that hasn't come out yet. So it's kind of a primer. I'm also going to make a big educational post on the site, but this is kind of my method. So if you look at an Elliott Wave structure, if you're familiar with it, it's a 5-way fractal. All markets, pretty much. I haven't seen a market yet myself. It hasn't done this, but I'm sure they're out there. That where you have you know, a division of 5 waves and a 3-wave corrective, ABC we call it, and then it's part of a larger that's a part of a larger 5-wave fractal. So if you look at the circle 1, circle 2, it precludes the larger third wave. And it's always the third wave that subdivides, and that's what we're trading for most of the time. I'll trade 4 and 5, but at a reduced position. I'll trade but I'm always looking for that 2 to 3 subdivision. And if you look at this, so if we start out, we get this nice little indication of a 1-2, and I'll start entering a trade at a 1-2. And if you're new to the crypto market, this is where you start to build your core. I always say to people, build your core for the long term, but make it small, because that core is going to take a lot of heat over time. You've got to be comfortable with its fluctuations. And then when you start to get the subdivision in 3, you can take a short-term trade and try your hand. And a short-term trade doesn't mean a day trade. Again, I don't do that. It usually means a swing trade over a few weeks, or you might, you know, bolster your core position basically. And then when you start to get in the third, I didn't take some profit, but you might take some of that profit off at that next third. I didn't put a little bubble there. And then you might take some of that short-term profit when you come down to 4 and add it to your core. So now your long-term position which was originally small, is now larger. And then you finally would take, you know, you always want to, again, one of the things we offer in Elliott Wave is that we structure profit-taking areas and we structure stops and support levels to take a trade. And you can literally do the math and say, my risk is this, and my reward is likely this. Every single trade we have as a stop and a profit-taking area, so that you can actually
structure your money management and structure your emotional situation. You know what you have in the market, you know what's at risk, and you decide whether you can take it. And that's, I will never tell somebody what position to take. But I'll give analysis so that you personally can make a decision based on your own financial and emotional capability. So anyway, so that's kind of my basically my method, and I think it's probably the method of a lot of traders out using Elliott Wave well, is you're kind of building this long-term position while you're taking little short-term trades on the smaller fractals, and then taking some of that profit and putting it into the longer term if you feel like it's warranted. And then there's a different count for that larger long-term trade, and some of the I have 100x on some of the long-term counts if they follow through over more than that long term. But to get 100x, you've got to take a lot of heat, and so you would naturally not put the majority of your assets in that long term. At least I don't want to take that much heat on the big giant positions, but I'll take some of those. I'll sort of enrich the position in the short-term trading, which could be over several weeks while I'm building that multi-year long-term position. And it's growing steadily. So hopefully that makes sense. I mean, I don't know if there's any questions about that. I think that's the last slide of sort of the method. If there's any questions about that, and again, you can get more. You can get free analysis. Again, some of the writings in the past that members had weeks ago is still relevant. And then I think there's even like how to trade Elliott Wave. I go over a little more detail. I'm going to put another one up there with this image in there. And then there's also a free trial that's 15 days, which you can sort of decide. Again, no one's going to come after you if you decide it's not for you, but you get 15 days to hang out and see what it's like. So there's no risk there. Any questions about, I went through this like my method and sort of quintessential method here. I don't know if anybody has questions about that.
Yeah, and while everyone's getting a chance to maybe get some questions in there about Elliott Wave or something that maybe we didn't get to cover from earlier in the presentation, I wanted to ask you a question. You talked about, in the beginning of the presentation, you talked about people maybe questioning where you got a certain price. Have you ever looked at, or has there been any discussion about arbitrage opportunities because of the varying pricing, or is it not quite that large that it would make sense? Or have you seen or looked at that at all?
I've actually tried to do it and I lost money. So I do track arbitrage opportunities sometimes for users if I see them. They are there. The biggest ones are in Bitcoin, but Bitcoin's network has gotten so expensive because the mining and transactions just so slow now, which I can't go into the tech of mining and what that means, but you can read about it. It really is hard to arbitrage that variance. Like another one I track is the difference between the US dollar tether, which to me is a junk asset in my point of view, but I don't have too much to go on there, versus the dollar. So the US dollar tether is a crypto that's pinned to the dollar value, but it often trades over the value of the dollar. But when it sinks below it, there's probably an arbitrage trade there for about like 3%, risk free, if you don't worry about tether going over a cliff, which I sometimes worry about. You can read about that all over the web. So to me personally, I make way more trading. When I was a less skilled trader, I tried some arbitrage. Again, like if you look at my history, back in 2011, 12, I tried some arbitrage trades, and I lost money. I mean, I lost like 1% because of the send over. If you catch them fast, the best way to do it, I know, is to have fiat and coin on multiple exchanges, and then when a typical, say, overvalued exchange flips and ends up lower valued, you can make the trade without making the exchange. The problem is usually the network cost and time is what causes the loss, or causes the arbitrage to not be valuable. If that makes sense. If you're trying to buy the cheap exchange and send it over to the expensive exchange and trade it out, that's what I'm trying to, the point I'm trying to make.
It does, and we're so if someone's just getting started in this market, where can they go to just start to get some, maybe they're with a platform right now that doesn't offer crypto charting. So is there somewhere they can go to just kind of get started and start to actually pull up some charts on these and maybe track them day in and day out? Is there any place that you would recommend?
The best charting, what I use for actually most analysis that isn't available in MotiveWave is tradingview.com. It's all free. I think I'm a pro. I pay a subscription, not much, which gives me something. I think, like, I have SMS alerts that fire off from TradingView if I have a price level I'm looking at, or they might allow me to save like hundreds of charts, which I literally do have hundreds of charts. So there might be something missing if you don't have Pro, but you certainly can get a bunch of free charts and check them out. I just don't know what your limitations are.
And especially just for talking about TradingView, if you are looking to make the jump, if you've never tried the crypto service, or you've never tried ElliotWaveTrader.net before, and you're going to come in and take that 15-day free trial, as Ryan mentioned, you're going to have full access to everything that he's posted, that any other user has posted, to the past trade alerts that he's posted. You'll be able to read everything. Once then you subscribe, that's when you'd be able to jump in and interact yourself. But I know for some people, they want to be able to also follow, kind of follow along in real time. Even though you're providing so many chart updates, that at least gives you an opportunity before you make a big jump in. You get to follow along with his analysis and then also see and play along with the charts, so to speak, yourself. Ryan, I'm putting you on the spot a little bit here, but you come across very well on your webinars. You always get a lot of kudos. I'm sure we're going to get another round of them today when we maybe close up shop here shortly. With your service, and I know it's kind of at the beginning, has there been any discussion, or have you given any thought to maybe a bi-weekly or weekly or monthly webinar just with your members where you kind of answer additional questions and go over the charts that you're tracking?
I want to. The challenge is my corporate career. I am trying my best to get out of that life. I live in the expensive Bay Area. That's the challenge. But it probably 2018 will be the year that I'm out of corporate life. It looks to be the case. That's at least my belief, if not soon. And when that happens, I will do it. Either bi-weekly or weekly is my plan, my secret plan. But now it's not secret.
It's only been shared with a few hundred of your closest friends. And if they didn't already, if you haven't come in and you want to give it a try, you could. You really have a lot of access to Ryan. I don't want him to have to say that and say how many hours he spends on the site, but you would really be surprised how much one-on-one access you have from him just through the trading room. And the nice thing about the trading room, as opposed to a webinar, at least in my opinion, is you can always go back. There's features at the website where you can bookmark, or essentially you're saving a specific post or interaction. So if you want to save something, come back to it later, whether that be tomorrow or a year from now, the website offers you ways that you can do that pretty quickly and easily. So it's nice you can always bookmark these things and go back to him and see what he was talking about and see that chart and how did it play out. It's really a very fluid site. So hopefully that's something people will find beneficial. So I as I did say, there weren't any questions about Elliott Wave, at least that came through right now. There are some questions that we didn't get to, but unfortunately, I think if we kept this open, we would do this for a few more hours, and that would be wonderful. But I think we'll probably go ahead and cut it there. But with the statement to say that, again, everyone is really just encouraged and welcome to come into ElliotWaveTrader.net. For those of you, I'm going to paste it one more time. That same, and maybe Ryan, if you could close up on that last slide. That also gives us the link to your About page, and I'm going to put in the chat.
I was just going to say real quick, if anybody has questions, they can get me on Twitter. If I get inundated, that may be very slow, which is fine. As long as everyone's patient, I don't mind taking questions on Twitter. I've got quite a few questions of late, especially some of our trial folks can't reach me on the site because I think we cut off folks from PMing me or posting right until they're past the free trial. I don't mind taking Twitter questions. What I don't do is give charts on demand on Twitter out of respect for subscribers who actually pay for this stuff monthly. But I will answer questions that are reasonable. So.
And what's that handle that they can reach you at?
Just at @rwilday. Yeah, or they can even search Ryan Wilday. I mean, it's sort of a weird name.
You'll be the only one to come up. And just for everyone, I posted a direct link to this in the chat box in the webinar platform. So if you didn't have a chance to screenshot that or jot it down, you have a direct link right now available. And certainly we'll maybe try to, when we follow up with an email to everyone, try to get some of these key links in that email for you here. So on behalf of everyone that attended here, Ryan, including myself, who learned a great deal. I learned a lot a few months ago. I've learned even more this time. I really want to just thank you for taking time out of your busy schedule to be with us and share your expertise. I really appreciate it.
Of course. Thank you guys.
I hope everyone has a wonderful weekend. And again, we hope you stop into ElliottWaveTrader.net and say hi. Take care.